Hey, it's Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here. Today, another losing day. Woohoo! I'm just have a second day in a row. I go up over $400 in losses. I finish up with 5 trades, minus 47 ticks overall. Not my best performance, obviously, but you know, um, not my worst either. So my account balance is a little under 30,000. My new equity curve, I think I have a drawdown down around 29.3, 29,300 and something, and I'm about 600 and something dollars away from that. So will I win? Will I not? I have no clue. I just keep going at it. I have a natural equity curve right now. Here's what I know. If if I was in the funded account and at the end of 10 trading days, I was sitting at roughly 370, whatever that number was as of yesterday, I would have closed out the funded account and took a check. So I would have done the same thing that I did in the previous time. What I know is that in the combine itself, I have more than 10 days now that I can trade. So today was like day 11. Um, And unfortunately, on both these days, I was right. I was right yesterday and I was right today. The only problem is I was wrong in timing. So the things that kind of get us in trouble, right, is one is timing, the other is pride, and I guess the third would be, well, that's pretty much it, right? It boils down to two things: fear and greed. So you're fearful of taking on a trade, or you get too greedy when you're in a trade and you don't take profits when you have that ability. So it boils down to, uh, all trading boils down to 3 points. Let's just put it this way. It all boils down to cut losses short, let profits run, and take profits on the ride. Oh, those 3 areas is the areas that all trading is around. So in other words, it's all around or risk management first, trade management second, and then money management third. So you have to control your risk side, which I get better and better as a trader every year that I trade in my risk management. My trading management gets better and better every year as well. I'm able to, although I see these $400 losing days right now, what I'm seeing is volatility and velocity and everything's increasing. So now I'm okay with that $400 loss because I know that if I can hang in long enough, I'll get that big win, just like I did last week when I pulled out the 1,200. So the next time I get that big win, maybe it's 2,100 next time. So I pull out even a bigger win in the market because that's the double-edged sword of volatility. If you're willing to accept the risk of higher volatility, you have to accept the risk of higher losses on one side, but you also, on the other side of that, you get to accept bigger gains on the other side. Um, I want to close out this particular summary on video to talk about the debate and another reason why I don't do a trading room anymore, live trading room, because there's always a couple people that get my goat, and it now. And not to say that they're wrong. They believe in what they believe, and I believe in what I believe, and that's where the two paths intersect is where we have the debate at. And debate's healthy, right? But when it comes down to not recognizing when, and this is my point, um, is the regular trading hours with the pivot point as important as it was 5 years ago? Or is the global trading hours with the pivot point more recognizable as the true pivot point as we continue to move forward in time? So the answer is obviously the globalization of the market. The U.S. market and its trading hours, although it's very important, and knowing where that point is can be important to your overall trading strategy, you need to recognize that there is other things out there other than America. We are not the end all be all of everything anymore. And that relates to the crude oil market, that relates to the world, that relates to the globalization that's going on in the world. And so I have deliberately chosen to use my pivot point study with the Globex or the overnight or the 24-hour market. Yes, that I stick to my guns, and if you're not using it, you're wrong. And that's in the discussion as it relates to me, and I'm not going to debate this point. What I know is that it's people, when I offer up a free trading room, try to show you a little bit about how I do things. It's my opinion. It's not your opinion, and it's not the way you do things. It's the way I do things. And if you don't like it, well, fucking leave. That's how I feel about it. Just hit the button, get out of the room, and quit telling me what makes sense to you. I know the 24-hour market versus the other side of the market. I've had that debate with myself and with many other people along the way. Do you think that you're the first person that I have had this debate with over the pivot point? I have deliberately chosen the Globex as my pivot point study over the last 5 years of my trading strategy. Why? Because it's simple. If you go down to the New York pit that used to be there, are there a lot of people standing around the crude oil market giving orders? I'm waiting. The crickets are listening right now. Do you hear them? I hear the crickets. Do you hear the crickets? God bless. Take care. I'll see you in the next video I put together. Bye for now.